Welcome everyone. Yes, Exodus from energy. Yesterday I did a YouTube video talking about a rotation out of energy and maybe into suggesting biotech due to the relative strength PMC indicator found on Thinkorswim and more importantly the TradeStation lifetime persons indicators. The Algo 17, a couple of things I want to address is where's this market going? From a technical perspective, meaning the stock market. Other relative peculiar setups between inverse ETFs not breaking out relative to the S&P's breaking down in the Russell, as well as what's going on with the volatility, the VXX. In the meantime, let's take a look at today's trade setups and also the Algo Optimizer, which we had a really good question from one of our members that said, hey, the settings don't look terrific. What's going on with the crude oil that we have in the algo room? And this is the algo strategy. It's a 5-minute that we run in the live trading room. And first and foremost, I think as you can see with today, what happened is the market has definitely shown liquidation. Once we broke 60 and then 60 and a half, and then we finally broke that 60 mark, you could see the big move, the bulk of the move today, a $2 breakdown occurred from about 8:50 in the morning, 9 a.m. before open outcry session, and since then we've had a couple little trades that haven't done anything, and we just exited out of a really nice trade, and then again it popped. Now I'm looking at this volume indicator, gang, and suggesting that maybe the worst is over for today. I mean, that's not hard to figure out. It's not often we see a 6% decline in crude oil, especially before a 3-day holiday heavy driving weekend such as Memorial Day presents. So let's take a quick gander of what makes this system work and what we need to maintain a good trading system. Yesterday I pointed out we had a couple flips here. Those red lines indicate negative trades or losers. The next trade we had really mirrored, as I pointed out in yesterday's YouTube video, a great decline. When volume starts to trend lower and you get a sell signal, it helps to give confidence. It confirms that sell signal is valid. It gets out of half the position at the profit target. It trails a stop on the balance. Then over here, it flips back into a buy, and you can see that from a 5-minute perspective, the volume is trending up. It gives a bullish convergence type of pattern and allowing a small scalp or short-term day trade to benefit. That's the model, okay? This is a 5-minute algo system. It does not tell you long-term direction of crude. It only trades a 5-minute model. And why didn't it take any of these shorts? Because this model does not take trades. It's only programmed to take trades when the trading room is open. So it helps people to understand if they're day trading in a live trading room, then you want to look at those setups. I can't help a market that generates a trade when I'm asleep at 3 in the morning. We can't partake in that, especially if you're monitoring your trade and your algo strategies. And more importantly, nobody should ever turn on a system and just go to bed, and because anything can go wrong. Murphy's Law is always present in this market against us. The internet could go down. You could lose power. Your computer, you may forget if you're trading off a laptop to plug your computer in, the battery goes dead. It's not going to execute. You want to make sure that in an internet world we have connectivity. Monitor your trading system. That's number one. All right. Number two, and your strategy here is to provide us with signs of market signals, and then we're here to take profits on those signals, and that's what the optimizer does. It manages to get out at profit targets, which is pretty cool. It manages to trail stops. Now, the problem with crude oil, it's a great day trade vehicle for algo traders, but it's also a very big pain in the neck because we have a consistent rollover every month. It doesn't have expiring quarterly basis. It has a month-to-month new contract. So we go from May, and then we go to June. Now we're trading July. And as we get into the second week on average, the second week of the month, so when we get into June, we're going to roll into what? August contract. So every month you know that you have to do one of two things: roll over your futures contract algorithm systems to the new month, we also need to watch this one tool down here. It's called ATR, and I've got it on your screen. Now, what does ATR signify? This is showing us, this is just a simple, and it's clearly marked. It's a 10-period ATR based on a 5-minute basis. What are the bars on average over the last 10 periods measuring? And it's showing that we're at a 14 ticks every 5 minutes. Well, first and foremost, if you have a 5-minute model that says I'm only going to take 10 ticks stop losses, then you probably shouldn't be day trading crude oil, because every 5-minute bar on average is almost 14 ticks. So therefore, you're probably not doing the right strategy with the risk factor. So we got to use a little cerebral input in trading strategies. Now, for that, I'd like to also flip over here to our main page, and I'm going to go over to our futures, and let's get down into looking at crude oil and see where have we come from with average true range over the last few months. So here's your average true range on your screen. And you'll note, and I'll highlight it with this little highlight pen, in this period of time since February, on average, we've been at about $1.30, a 130 ATR. We dipped down in mid-April to around $1.05, but on average, it's about $1.30 ATR. Around the 5th of May or so, around the 7th of May, we started to expand out of that ATR, and as you can see now, we're at the upper end of a 10-day ATR with a $1.78 reading. Well, that's an important observation, because if you're in a period where you have controlled ATRs, you can pretty much say that on average every day this is the range we have. So therefore my trading model, I should expect to be able to take X amount per signal out of the market. If the ATRs expand, that means we have to change a couple items. A, risk per trade. B, we may have to expand the max loss, max win perspective or risk reward ratios as well, right? That makes sense. If a market has a contraction of average true range, you can't have a wide profit expectations in a narrowing trading environment. Kind of like what's going on with the euro currency. You can't take 50 points out of a day in the euro currency on a directional trade when the overall daily range is less than 40 points. That's the point I'm making. So you have to maintain a system, and the one thing you want to maintain is to keep your eyes focused on ATR. If you know you have a product that converts every month to a new contract, maintenance once a month minimum. Maybe you have to take a look at your ATR at the end of every week. Maybe you have to take a look at ATR twice a week. In the case of looking at the market now, I know that we have a daily range today in crude oil, and this is just a lesson on how to maintain structural systems for trading models. So if you take a look at the crude oil today, we have a $4 range, more than twice the $1.78. So tomorrow, coming into the market, you know that we had a really big day today. What are the odds tomorrow we're going to have a back-to-back big range day? Probably not great. Usually you get one big blow-off in the market, one day big range, the next day we get what? A narrow trading range, because people are tired. Maybe money flows have changed hands. So therefore, we want to be monitoring that net change on the from day to day in its ATR. So that's a big observation, number one. So today, definitely we had an exodus out of energy. And more importantly, we started to share that with you yesterday in the video. As I mentioned, we have a rotation out of energy and into biotech. So let's take a look at that concept. So for that, we're going to go up to our main screen here. The worst performing sectors today, USO, which is the ETF on crude oil. The OIH down today 5%. That's the oil service sector, your Halliburton, your Schlumberger. I mean, that is just ugly. Yesterday, we put the video that we said you got a mass exodus. I didn't say mass exodus in the video, but I said we definitely have rotation out of energy. And there it was the sell signal, and then today corresponding follow through. That's a huge liquidation that's come in the market. Now, eventually it'll provide maybe a potential buying opportunity in here, as I don't see this sector going to zero. But for right now, I'm not one to aptly pick the bottom here in OIH. In looking at oil and gas exploration, same thing. XOP had a sell-off in the market. It's actually not as disastrous as OIH. So when we do return to buy signals, my guess is, I don't know, maybe around 26, somewhere near this area of concentration of old highs and lows that we had back at the end of December. It'd be some strong support area. But until we get actually corresponding volume setup, relative strength improvement, until we get an actual buy signal in here, we may see some more pressure in the market. So that's the liquidation that took place in the energy sector. I stated, though, so half of the sentence was there's a rotation out of energy and maybe into biotech. So let's take a look at this biotech, or let's take a look at the tape. And right now, biotech's down 1.4%. That doesn't show a lot of warm and fuzzy love of buying. But you know what? It's not that bad either relative to the overall market. It's in fact, consumer staples is only down 0.4, which is 25 cents, and IBB down 1% is really not a big deal. So let's take a look at IBB and say, okay, wow, look at the difference between the chart action of energy and biotech. Biotech hasn't even broken out of its trading range of the last week and a half. So that doesn't mean that money was fervently coming into this market and forming it to rise. It just showed that there was money starting to come into it. And that's very, for me, a great identification that the relative strength, the bright blue down here in the PMC indicator, was showing that the segment of the market was outperforming and that there's probably money coming in. At least there's no money coming out very significantly, right? That's the key. So I would have to say over the next week or next couple days, because it's certainly not going to be Friday, in my humble opinion, ahead of a 3-day holiday weekend. I think the chance of the markets exploding and rallying right now are slim to none, and I think slim's on the train ride out of town for the Memorial Day weekend. Let's review the fundamental headlines. China is dictating the fact that we've not been nice at the negotiating tables. We have a tussle between the Democrats, Nancy Pelosi, the Speaker of the House, and Dick Durbin, the minority whip of the Senate, both coming out on C-SPAN and TV and press conferences saying that President Trump didn't behave at a meeting about the infrastructure spending. That's not a peaceful olive branch to get the two legislation branches together working. So I don't think that's going to change between Thursday lunch hour and Friday market close ahead of the 3-day holiday weekend. So markets right now are in, I don't know what to do, sell, liquidate, hedge, and then we may find that people could be in a tight spot with margin call liquidation, and you might see some follow through. So at the very least, I would have to say that while LABU, which is a 3-time leveraged ETF, is not breaking and tearing up to new highs, it's not crashing as well, making new lows on the day like we saw in the energy space, retail space, et cetera, et cetera. So we want to focus in, and another thing about the biotech and the healthcare space is that seasonally speaking, we see strength in the summertime. A lot of medical, pharmaceutical conferences take place, new discoveries take place, and so we definitely see potential for upside. So maybe on more weakness against these lows, we'll have a better opportunity in biotech stock segment of the market. Also, you see this little fuchsia color here, and I'll try to expand on this for you. This is what we call a last conditional change. It's a resistance, this pink and gray area. It's one of the John Person last conditional change indicators here. And, you know, if we can break out of that level and manage to get a close, X means close, a close greater than that line in the sand, biotech, I feel, has some good upside. The relative strength's looking a little bit better. The volume indicator, hard to see, so I'll line that up for you. The volume indicator is starting to improve. And, you know, that's the making of a good market. Nobody's talking about this. And part of what makes the markets is I always like to be in areas that no one's talking about, because generally the news talks about what already happened, not what's going to happen. The last thing I want to be is in the market when they're talking about it on TV. That's a good sign that the move's already occurred. So what I would be warning you, or at least I'm suggesting, is to keep an eye on Biotech at this point going forward in the next few days, trading sessions after next week we get back. There could be a surprise upside. After all, if the market couldn't really break down on a major negative day like today in the equities, that's a good sign. And that's that relative strength tool, the PMC, that's helping to identify that. All right, lastly, let's get into what I do think about the market here from a technical perspective. The Russell, it has broken down, and it has broken today. We opened lower than our support, number one, and now our next major support is coming right in this yellow line, or the quarterly level of person's quarterly pivot, which is this blue level in the sand. Volume by measurement of the OBV is broken down, and notice this is the advanced decline on the Russell, and we now have a consecutive series of new lower highs and lower lows. Now, the time is 2:18 in the afternoon on a Thursday. I don't know where the market's going to close, but I can say it needs a lot of work to negate this negative construction in volume and breadth in the small cap sector. So I can't tell you to get short now because it's right against an old level of support, but I can say that it's probably not the best trade to look to get long yet either. So here's another one. Let's take a gander at the Nasdaq Composite. It broke down and made newer lows. Also, note that we have some red arrows on these charts. The Nasdaq Composite just formed a PPS sell, and it made a new corresponding lower low in price. That's not positive. Next, the New York Stock Exchange Composite Index. I don't know how it's going to close today, but I can tell you right now, if this was the close, this pattern of the advanced decline making lower high, lower low, that's not a great bullish sign either. Finally, at the top of the food chain is the blue chip darling stock indices. The Dow Jones Industrial Average, it has a technical breakdown starting a daily PPS sell signal. We needed to see a close greater than that line in the sand in order to prompt a bullish bias back to the upside. It never happened. And now, what are we doing? We're testing the prior week's low. So personally speaking, if we get a daily close less than a prior week's low, and this is not just any low, this low goes all the way back since February. That's a major, let's expand on this so that you can see this clearly. This would be a very bad thing if we had a daily close, but it would be worse if we get a weekly close under that. And as it is right now, it's just the testing the bottom of a trading range. So I can't get aggressively short either. We're not really in a trend, are we? It's sideways. We know that the upside was resistance, and we know the downside is near support. So for traders out there, we are examining this market closely, and we are always one tweet away from a pop to the upside, but I don't think that's going to come between now and Tuesday's open. With the fact that China is already throwing some, I don't want to say egg foo young on our face, but they're throwing some slanderous, saying we're the ones that aren't treating them with respect at the negotiating table. With the tassel that's going on between President Trump and the speaker, and obviously it kind of makes sense. If you were investigating me and I'm supposed to get along with you, you know, right before you come to a meeting, you tell me that I'm going to be, it's kind of crazy, right? So if you think about it, it's just bizarre. You can't make this stuff up. Now, I don't care what side of the aisle you're on, whether you like President Trump or hate President Trump. It's just bizarre headline news. And one thing the markets don't like is negative headline news. We want peace, we want accord, we want happiness, we want jovial, we want good policies, we want tax cuts. The market wants to see progress. If it doesn't, it does one thing, and it's called sell, and I'll figure it out later. And that's what I think this is about today. It's not about markets turned into a bearish economy and a recession. It's about, I don't know any different. It's a 3-day holiday weekend. Let me out right now. And that's where we stand. And I don't want to get anyone, I don't think this is the time to get aggressive, either long or short, in the market, but we want to maybe pay attention that the next big opportunity, believe it or not, could be for some upside recovery in biotech. And I'll keep you posted. Thanks for watching.